Today I want to explain to you how to build credit with a line of credit. So here are the tactics I want you to really pay attention to. See, the whole thing is, first of all, let's go back to the origins. What is a line of credit? A lot of folks think they understand what a personal line of credit is, but they really do not understand. So a line of credit is kind of similar to a credit card. The only difference is that you have actual cash as opposed to something on a plastic. So you can actually you can draw from the line to actually buy stuff with cash. And it's really important to understand that if you want to actually build credit with a line of credit, you got to pay attention to your credit utilization ratio. And the whole thing is that, let's say you have a U.S. bank or a key bank for that matter, grants you $10,000 in a line of credit. And you want to use, let's say, $3,000. So $3,000 out of $10,000, that's like 30% CUR, credit utilization ratio. Now, there is a correlation between your credit standing, in other words, your FICO score, and your credit utilization ratio. But see, the line of credit is not just cash that you get, that you just have on the side. You use a line of credit for specific stuff. So you want to use a line of credit for unexpected expenses. Let's say you have a renovation to do in the house, like in the basement, in your backyard, or you have an unexpected medical expense, anything unexpected. Or let's say you have a long-term project and you think that you really would not need the cash right away, but you will need the cash over a series of, like, you'll need the cash gradually. That's when you want to go for a line of credit. Now, there is a correlation between your financial standing, like your cash inflows and a line of credit. So when we talk about a line of credit, we're speaking about CUR, of course, but we're also thinking about your financial standing. So what is your cash inflows? I mean, what is your revenue? What is your expectations? Okay. And the third thing that's really important also is if you have a business, or that's what we call the ancillary factors. Let's say you have a family or you have a business and you might need extra cash to actually devote to those purposes. So a line of credit could also be very favorable to you. So when you think about a line of credit in terms of building credit, think about what you're going to use the line of credit for. By the way, boss, welcome back to the show. It's really a pleasure to have you here to have this quick convo with you about how to build credit with a personal line of credit. So we're not speaking about a business line of credit. We're speaking about a personal line of credit. If you want to build credit with a personal line of credit, you need to understand the different types of lines of credit. So when we talk about personal line of credit, we're speaking about 4 or 5 types of line of credit that you can use to actually build credit. So you have a line of credit for emergency expenses. Those you can actually get them from banks and sometimes credit unions. You also have lines of credit for long-term projects. So those you can get them generally from banks, big banks, or even regional banks, and also credit unions. You have a line of credit for cash flow management. Those are usually from banks. Credit unions are not really interested in giving you a line of credit for cash flow management. So cash flow management means what? It means that you are, let's say you have a family and you just trying to really, you need a line of credit to actually make ends meet. Sometimes, your revenue goes down. Sometimes your revenue goes up. So you're trying to really manage that fluctuation through a line of credit. You also have a line of credit for debt consolidation. So let's say you have a series of liabilities, a series of debts, and you're like, listen, let me try to really consolidate everything. Instead of applying for a debt consolidation loan, you just go for a debt consolidation line of credit. So basically you have a line of credit and you use that line of credit, you tap into it to gradually consolidate your debt, to gradually extinguish those liabilities of yours. You also have you can also get a line of credit for rare life experiences. That's what I said earlier, unexpected things. Stuff happens, right? Stuff happens and you're just trying to really have like, okay, I need some extra cash to really, and when we talk about rare life experiences, we're speaking about something positive or negative. For example, something positive can be the cruise of a decade, playing the great golf courses of Scotland, taking a French or a Spanish cooking school vacation. All right. So, and the negative things are stuff that happens and I have a medical emergency and I need cash. So for those 5 events, life circumstances, you may need to have a personal line of credit, and you can use that appropriately to build credit. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about how to build credit with a line of credit. Now, let me give you a few pro tips here. If you're trying to build credit with a line of credit, you need to start thinking about a line of credit as a credit card. This is really important because a line of credit resembles a credit card. Why? Because there is a specific amount you can borrow against it's like the limit on most credit cards, right? I just gave you the example earlier about US Bank or Key Bank giving you 10 grand. It's like you have 10 grand on your credit card and you can tap into that 10 grand and you have to manage the limit. Now, when we talk about building credit with a line of credit, we're not just speaking about the CUR, the credit utilization ratio. We're also speaking about your ability to repay whatever you tap into, because some banks will say, listen, we want you to really tap the limit, but you have to repay whatever is outstanding, either immediately or gradually. Some banks will say, listen, we want you to pay only interest during the draw period, and at the end of the period, you have to pay the whole balance. In other words, the repayment period. So we have the draw period and the repayment period. So when we talk about a personal line of credit resembling a credit card, first of all, there is a specific amount you can borrow against, right? You may use the line of credit for any purpose. You may use the line of credit whenever you want, right? Because it's there. You can pay off the balance over a long period. Again, it depends on the bank. Some banks really will want you to pay over a long period. Some banks will say, listen, pay it at the end of the draw period. And in most cases, as you pay off the balance, you free up the loan amount that you can actually borrow against. Okay, and this is really the classic definition of a revolving credit. So when we talk about a revolving credit, such as a line of credit, if you want to build credit, you need to pay attention to your payment history, to your CUR, to your credit utilization ratio. And most importantly, you have to see how those things balance against your overall financial situation. In other words, if you're having an influx, if you have a surplus of cash, in other words, your financial situation is getting better, it's very important to keep your credit utilization ratio very low. Let me give you a winner here. And I want to talk about a home equity line of credit. So this is a specific line of credit that a lot of folks use, a lot of folks use, including myself and some of my team members, that we use, that everybody uses to build credit. Now, when we talk about a home equity line of credit, this is basically a loan secured by the equity in your house. And your equity is defined as the home's market value minus its outstanding mortgage balance, right? Let's say right now, you owe, let's say your house is valued at $500,000 and you owe, let's say, $350,000 outstanding mortgage on that property. So you have equity of $150,000 in the house, right? So $500,000 minus $350,000. So basically that equity, you can go to a bank or a credit union for that matter and say, listen, I would like to have a home equity line of credit. And basically, the bank will do an appraisal and see whether or not the house is actually worth $500,000, and they'll get you something. They might get you maybe 80% of the $150,000, or maybe 60%. It depends on the risk management of the bank. Bottom line here is that it's very rare that banks or credit unions, for that matter, will give you 100% of the equity you have in the house, because they need to actually have a certain buffer, right? What I want to say here is that a home equity line of credit is a powerful tool when it comes to building credit. Why? Because first of all, the amounts are consequential, right? We're not speaking about 10 grand or we're not speaking about 5 grand. We're speaking about, normally a home equity line of credit, it's in 5 digits, right? So you have 10 grand, 40 grand or whatever. So, or even 100 grand. So the amounts are consequential, which means what? It means that it will have a bigger impact on your credit score. Because especially if you are able to maintain a low CUR, because lenders and like everybody else looking at your credit files will see that, hey, listen, you are able to manage a quote unquote big debt. So it's important. So the same process applies here. We're speaking about paying attention to your CUR, to your credit utilization ratio, paying attention to your repayment history, and paying attention, most importantly, to your overall, I would say your overall debt versus income. So we're speaking here about your DTI. Pay attention a lot. This is really important. Let me give you a bonus here. I want to talk to you about a business line of credit. So when we talk about building credit with a line of credit, obviously you can also build credit with a business line of credit. So if you happen to be a business person, if you're a businessman or a businesswoman, right? Let's say, and you're trying to really beef up your FICO score. The cool thing about a business line of credit is that you can simultaneously use it to build business credit, but also personal credit. This is really fantastic. So you have one shot, and you have two goals in one shot. This is really fantastic. Remember, when we talk about a business line of credit, this works like other lines of credit. You reuse it and you repay as often as you like, as long as your account is in good standing and you don't exceed your credit limit. Remember, you never want to exceed your credit limit, right? Because we're talking about what we're talking about keeping your credit utilization ratio as low as possible. So if you exceed your credit limit, that means that your credit utilization ratio is like above 100%, which you never want to have anyway, right? So basically, limits on business lines of credit are usually lower than term loans, typically ranging from $1,000 to $250,000. They are also usually unsecured, which means collateral such as inventory, real estate doesn't come into play. And lenders make decisions based on personal and business tax returns, bank account information, and business financial records, such as profit and loss statements and a balance sheet. So the whole thing I'm trying to say here is that if you manage your personal line of credit properly, this will affect your ability to get a business line of credit, okay, which means, so you'll create a positive domino effect. And the cool thing is that your business credit score, your paydebt score, your Experian and Tailor score, your Equifax business score, all those will go up as well as your FICO score. So it's really important. There's a strong correlation between your ability to manage your personal line of credit and your ability to also manage your business line of credit. Okay. And so this is important now. The thing is that this is perfect if you are, let's say, you are a single member LLC, or you're just a multi-member LLC, you're a C corporation or S corporation, doesn't really matter. If you want your good business line of credit, responsible usage to affect your personal line of credit, apply for the business line of credit, not with the EIN, but just with your social. So this is the route that we advise our viewers to take. By the way, boss, I want to quickly remind you of today's topic. Today we're having a conversation about how to build credit with a line of credit. Let me give you a few steps here. I want to go back to explaining to you how to get a line of credit. So if you want to build if you don't want to build credit with a line of credit, if you don't have a line of credit right now, it's important to apply for a line of credit. Remember, when we talk about personal lines of credit, those often come with lower interest rates than credit cards, making them, in our view, a superior choice for borrowing. They also offer variable access to cash instead of a lump sum, single-purpose loan, right? A credit line allows you to borrow in increments, of course, right? Repay it and borrow again as long as the line remains open. Typically, you'll be required to pay interest on borrowed balance while the line is open for borrowing, which makes it different from a conventional loan, which, as you know, is repaid in fixed installments. So the thing here is that if you just listen to me right now and you conclude somehow that a line of credit best meets your needs, it's important that you prepare your case before approaching a lender. So what should you do? Now, first of all, how do you apply for a line of credit? The thing is that, remember, as I said before, the lines of credit are usually unsecured, which means what? It means that you don't need to offer collateral to protect the lender if you default. And the only difference is the home equity line of credit, but because those are, as I just explained to you, secured by the equity in your home. So when you want to apply, pay attention first to your FICO score. So before you reach out to a lender, pay attention to your FICO score first. Pay attention to your income level. So how much are you making? You want to pay attention to your employment history. In other words, are you have a full-time job? Do you have a part-time job? How long have you been working? And the last thing you want to pay attention to is the amount of line of credit you want to apply for. And all of these things I'm talking about, you can actually go to any lender, ask questions about the conditions. That's what you should do. You should do anyway. You want to ask them the eligibility criteria, and if there is a possibility for you to do a soft pull. In other words, if there's a possibility for you to pre-qualify for the line of credit, you want to do that. Right now, the big banks, the big national banks, are not doing personal lines of credit. If you want to get a personal line of credit, you have to go to what we call the tier 2 banks, the regional banks. I'm speaking about Key Bank, Truist, Fifth Third, BMO. I'm speaking about Key Bank, of course, TD Bank. I'm speaking about so you don't have Wells Fargo, you don't have Citi, you don't have Chase, you don't have Bank of America offering personal lines of credit. So you want to go to the bank and you want to ask for it. But as long as you have those 4 elements that I spoke about, your income, your employment history, your FICO score, and your ability to repay, like if you have to demonstrate your ability to repay whatever you tap into a loan, it should be good to go. So the bank will give you an amount that really fits your financial situation. Let me give you a warning before we actually close to this conversation. If you're trying to build credit with a line of credit, it's important that you really pay attention to a few potential challenges that the lines of credit have. You have to understand, when we talk about lines of credit, we're speaking about unsecured loans, right? Which means what? The bank is taking a large risk here. And so the bank will be monitoring your usage of the line of credit. Usually what banks do is that they will actually give you they will approve the line of credit, but they're not going to give you all the full amount. Let's say Key Bank approves you for $20,000 line of credit, and what will happen here is that you are approved for the line of credit. But if you want to tap into it, you have to request the amount you want to tap into it, and the bank will make those funds available to you. So you don't have access to the 20 grand right away. Key Bank will say, listen, if you need $5,000, let us know, and we'll actually unlock the $5,000 for you. So, and sometimes you could get a check in the mail. It could be an electronic transfer. They might require you to go to a branch, and so those are certain controls that banks have in place to make sure that they are actually monitoring how you're using your line of credit. So, because it is unsecured, the bank will be paying attention a lot to your usage, your CUR, your credit utilization ratio, and if the bank sees an increased risk, what they will do is they will start asking you to make a payment, to make it can be a minor payment. It can be 2%, 3%, or 10% of the outstanding amount, but they will want you to really pitch in a little bit to make sure that you still have something to lose. Okay. So what I'm trying to say here is that there is with personal lines of credit, of course, you think the money is yours, but it is still a debt. It is still a liability. If you want to build credit with a line of credit, you need to make sure that you pay attention to your CUR and your DTI. Your CUR, your credit utilization ratio, which is the amount of the outstanding amount over the outstanding amount divided by the total amount that was granted to you. That's the CUR. The DTI is really your debt to income ratio, which is your total debt versus your total income. Okay, and this is really important to monitor that, because otherwise, it's very easy to actually get into a negative cycle of indebtedness, and you don't want that. Thank you so much for your attention. I really appreciate it. In today's conversation, I explained to you how to build credit with a line of credit. And I talked about the tactics, the overview, the pro tips. I give you a winner strategy here, a bonus, and the steps you need to follow. And I close today's conversation with some warnings. Thank you. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.